So as I said at the AGM, we've made a good start to the year and that's continued. So I think first half of the year we've had a solid performance so far. Some of the business units up a little bit, some of the business units a little down, but overall I think I'm pretty happy with how the business or how the group has performed. We're 4.6% up on revenue on a constant currency basis. Our profitability is 10.1% up also on a constant currency basis. The B&I business unit continues to go from strength to strength. I think the market segmentation work that's been done there and the work on niche markets is really paying off. Civil engineering business, although I'm pleased with the track we're on there, the market conditions and some of the seasonal factors have held that business back a little bit in the first half, but we expect to perform better in the second half. I think we can say that now we're at a point where the manufacturing issues we had in the CTT business last year are behind us. The guys have done a really good job of getting production back on track. Now we're still working hard in the marketplace. We've had some good wins this year in our tensile architecture business. The tarpaulins part of the business is still a little bit slow, but that really I think represents the reputation rebuild we've got to do, particularly with our German customers on customer service and product delivery. But again, I think good progress has been made there. We said at the end of last year that we would see margins and volumes normalise as we go through this year, and I think we're on track to deliver that. So of course profitability is important, but we also focus on the balance sheet and working capital in particular. This year, working capital of the mid-year at our normal mid-year peak is a little bit higher than we would have expected. I think that's largely explained by the civil engineering business and some of the pre-build that we would normally do there, but also exacerbated a little bit by the slower start to the season. But as we go now into the normal season, we'll see that unwind as the year progresses, and we'll be back at the levels we expect to be by the end of the year. After a solid start to the year, we are on track to deliver the board's expectations. There's not a lot of positive news coming from the markets out there, but despite that, we're very focused on some of the things we're doing ourselves to improve the bottom line. Our business units are working very hard on their market segmentation work, their product development work, and we're seeing benefits from that. The operations guys are very focused on our operational excellence programs, and that's a one initiative at a time, but we're seeing the value of that also coming to the bottom line. So yeah, confident we're going to deliver what we said we would this year. Portfolio management is and continues to be a key approach to running the business. We made a small acquisition on the west coast of the US in January, Wallfloor. We're very pleased with that. The integration of that's going well. Post-period end, we also announced the disposal of the Lokeren site, or the agro-textiles business. Another example of part of our business that wasn't meeting the objectives. We didn't see a path to it meeting the objectives, and hence the disposal.